All right, limping into the summer months now, the Nasdaq just had its worst month since October 2008, plunging 13.3%. Big tech earnings have fueled the bearishness, most notably a disappointing quarter from Amazon. Julie, this was wow, what a month for April. And of course, you had that Amazon earnings later in the month, really putting a button on this performance for the Nasdaq. But it's not just Amazon earnings. Really, this has been happening. It happened throughout April, where disappointing tech earnings, of course, Netflix as well, concerns about rising interest rates. You put all these things together, you're going to get a disastrous month like the Nasdaq just had.
And it's not just the Nasdaq that we should point out. It was actually pretty broad-based selling over the past month. Take a look at the Yahoo Finance Interactive here. The Dow off very sharply over the past month. The S&P 500 down about 10% on the month. And then you had that disastrous performance for the Nasdaq, which, to be sure, was worse than the others. But it was pretty bad for all three. Let's dig a little bit deeper in here and take a look at some of the worst performing stocks. So here's the 1 month chart of the Nasdaq 100, and let's equal weight it so we get an idea of the rankings. Netflix was the worst performer with about a 50% drop. Peloton, a big drop. Nvidia, Lucid, Advanced Micro Devices. So a lot of the companies, Netflix had been underperforming, but it's interesting to see the chip makers in here. PayPal, of course, a big underperformer. You see that on the bottom left as well. And Amazon on that list too, of course, as we've been discussing. Here's the 1 month chart of PayPal and that 27% drop. So that's what you've got within the NASDAQ 100. But I think it's also perhaps useful to look at the sectors within the S&P 500. When I talk about broad-based selling, this is what I'm talking about. XLP, that's the consumer staples, and even they have started to roll over a little bit. But you've got XLC, the communication services, XLY, discretionary, XLK, tech, XLF, financials, all of them pretty deeply in the red. And that only group that was higher, the consumer staples. And you can see in the past couple of weeks, as it started to report earnings, what we saw happen there with this group, where, yes, that 2% gain came all in the front part of the month. And then in the latter part of the month, you started to see that waver. That's something that the Wall Street Journal wrote about today, as we started to hear from these companies and saw as their margins are getting squeezed. So where is the refuge in this market? I don't know at this point.
Well, it looks to be consumer staples. Maybe this goes without saying, but I'll just remind everyone, of course, the Nasdaq just doesn't contain tech stocks here. And Julie highlighted a couple moves here. Dollar Tree, Monster Energy drink, favorite of mine. PepsiCo, Kraft Heinz up 8.3% in the past month. So you've seen that rotation into consumer staples and within the Nasdaq. You could really get the sense, Julie, that people are positioning for a second half growth slowdown. That's my read off of this move in staples.
And there is one more place that perhaps we can see that evidenced as well. Let's take a look at oil prices here. Now, over the past month, oil has been a lot more volatile. Here it is. You've seen a lot of swings in it. It is down this morning, some 3.5%, getting closer again to $100 a barrel. Of course, as we've talked about, oil's been an outperformer this year. You saw the XLE, the ETF that tracks energy stocks, still up on the month, but it's the second. It did roll over on the month, I should say. It was lower, but the second best performer on the month. So are we going to start to see a rollover in that group that had really been one of the standouts? That's something to continue to watch as well.